I'm extremely excited to introduce and most appreciative of Tim Godin, from a senior associate at Altera, and Charlie Orr, director of business development, Rinalda Equity Partners. You guys want to take a minute, introduce yourselves, talk a little bit about your firms to get us started here. Maybe Tim, you want to take us first?
Yeah, absolutely. So nice to be with you all today. As Jeff mentioned, my name is Tim Godin. I'm senior associate on the investment team at Altera Investments. We are a private investment firm based in Atlanta, Georgia. We invest primarily on behalf of ultra high net worth individuals, family offices, and RIAs across the broader Southeast. The core of our firm is private market investing. We have a focus on the lower middle market and invest across all the major asset classes within that space: private equity, private credit, and private real estate. Most of what we have done historically have been fund investments. So, committing to an underlying fund sponsor, such as Charlie's fund, or we will also invest directly in co-investments and independent sponsor-backed transactions.
Wonderful. Thank you. Charlie.
Yeah, Jeff, all via team, thanks for hosting. Love this topic and love talking about this information, especially right now in the world that we're living in, that we'll get into. But so Charlie Orr and I lead our business development function at Rinalda Equity Partners. We're a controlled buyout private equity sponsor based in Winston-Salem, North Carolina. And we focus on pure play, lower middle market, and we think about that in terms of really 2 to 10 of EBITDA. We specialize in founder-owned, entrepreneurial-led organizations. We have been doing that, and that's been our mandate and criteria since the late 90s. And we think about the world really in 3 industry verticals: industrial services, healthcare services and products, and outsourced business services. We're investing out of Fund 4 currently and have a great track record, really partnering again with those entrepreneurs and founders, and look forward to the discussion today.
The topic is mastering deal sourcing. I happen to know from working with you guys and being close to you and catching up every so often that y'all have done that, and that presumably by way of so many of y'all that are joining us, and thank you again for joining us, that we're here to share thoughts. Maybe some folks are looking for how to do this. I want to start us off, though, talking a little bit about just kind of, let's develop a little bit of a point of view here going on in the market. I mean, I think the sort of points of view people have on this market right now maybe are all-time high if you just took as a proxy the sort of emails about the matter. So super juicy topic. Charlie, what are you seeing, man? What's going on out there? What's the state of deal making in private markets right now?
Yeah, and first off, I will level set that we were coming off of absolute banner years in 21 and 22, and for us, those are a bit of an unrealistic benchmark for the coming years, this year included, and the following years. I think capital was so freely available, and there was such just a large population of fundamentally sound, great founder-owned businesses and upmarket businesses that those were real record levels. Where we are today, it's been a very, very interesting, last 10 months. I would say that what we've been seeing is generally 90% of what we've seen. There's been a slowdown in new deal opportunities. Obviously, debt financing, credit markets have been different, have been tight. I think sponsors, fund managers have been able to underwrite increase in debt financing, and that's somewhat leveled off in the lower middle market. What we're seeing across the board in this 90% quartile really is difficulty finding good, fundamentally sound businesses that are backable, institutional backable. And what I mean by that is that there's true revenue visibility, sustainability of their current growth, and great tailwinds behind the business and in markets they serve. So we've had a hard time really finding good opportunities that we could get behind. Now, the other side of the coin is that 10% that I haven't mentioned, these are the outliers, the businesses that have traded at absolute premiums. That it's been a robust process, sell-side process, and it's been an absolute feeding frenzy on. I mean, us ourselves, focused on the lower middle market, have been competing against funds that we have not ever competed with in the past due to that supply-demand imbalance. Last thing I'll say is that really the redeeming factor here that will continue to drive M&A deals is their record level of dry powder and capital that needs to be deployed by funds like ourselves and groups like Tim. And so there's this supply demand imbalance where we need to find good businesses that we can back. And there just haven't been as many actionable businesses and opportunities in market. But we are hearing good optimism for Q1, Q2 next year and growing pipelines at this point.
Yeah. Appreciate it. Lines up, I think. And for some reason, I just got this visual of sort of a big crowd, everybody trying to kind of pile into the same place. And a lot of times the case that there's some sort of zombie-like behavior going on there. But to your point, I mean, records set and seemingly consistently broken, just 2-3 years ago. As a software provider in this market, I can tell you without a doubt the sort of creativity with which people were coming to form new vehicles and just raise as much capital as you possibly could and even deploy them in creative and interesting new ways was very apparent in talking to people as a software provider. Tim, let's hear your take, man. What's going on out there?
Yeah, I think this will be an interesting conversation, mostly because Charlie and I are coming at this from two completely different perspectives. One as an actual principal investor, and another as an allocator. So for us on kind of the allocation side, we've seen just a general slowdown. To echo Charlie's comments, there's just been a general slowdown in transaction activity that's caused all of our fund investments to kind of draw out the expected cadence of cash flows. And for us, that's kind of slowed down our overall investment program. What we're looking to do on a go-forward basis is to be a little bit more pragmatic about how we approach the types of asset classes we want to invest in, and where we want to prioritize on when it comes down to actual differences in transactions. So that's namely funds versus direct deals. There has been more opportunity for us recently on the direct deal side. There's a general movement that we've witnessed over the last 5 years or so in independent sponsors just electing to stay independent sponsors and raise deal by deal, picking off smaller investments. To echo Charlie's comments as well, I mean, we've seen a proliferation of capital out market, and a lot of smaller funds have just been selling up to those individuals and have really benefited from kind of the market dynamics that are really driven at an institutional level from much larger capital providers. Again, all benefit for us in this space, and we continue to see a lot of value in investing in the lower market. Overall, I think we're just trying to be a little bit more thematic. So, this is another topic that we talked about the other day. Charlie just being more purposeful with kind of the types of businesses we're looking at. There are going to be winners and losers moving forward in terms of who benefits from the type of economic cycle that we're in. And just wanting to be cautiously optimistic moving forward.
Yeah. I want to talk a little bit more about that. Again, this is sort of real time. We did talk the other day and kind of swap some thoughts, and now in real time, I'm sort of imagining, based on what Charlie had told us, this sort of crowded, let's even go zombie-like place where everybody's kind of trying to pile into the same thing. And appreciate you guys kind of explaining the dynamics there of why that's the case and what more or less what's going on there. I think today's webinar is all about what do you do about that. And by the way, I guess it is the day after Halloween here in the U.S., so maybe the zombie thing is come and gone, but we're gonna stick with it to kind of unpack this point here. So what do you guys sort of doing, Charlie? Let's talk a little bit about what you do. You just sort of pile in there with everybody else and kind of wander aimlessly. No is the answer. I know that because I know you and what you guys are up to. But let's talk a little bit about that. What's been the mindset as the result of what's going on here? And of course, we're a technology company. We're talking about some of the technology here, but more broadly than that too.
Yeah. I mean, you certainly can join the zombie population, get infected, and kind of pile in line.
Mhm.
I don't think it's a winning, sustainable strategy, especially competing against funds that you do not want to compete with in an auction process. How we're thinking about the world and trying to be different, and Tim referenced this, is really taking this thematic approach. And when I say thematic approach, I think a lot of sponsors and fund managers are using this terminology today. But look, we have three industry verticals: industrials, business services, and healthcare. That's everything but energy and direct to consumer, consumer oriented goods. And so it's still a pretty broad, agnostic, generalist approach. And how we drill that down is that the market has allowed us to take a step back. So Jan 1 into Q1, we took a step back as an investment team, as an investment committee, and said, look, what are the three areas that we have very good experience in? One, two, have a bench of operating executives who know the space cold, who know the nuances of the business model, the sales cycle, the red flags, the merits, the risk. So these are seasoned executives that we've partnered with. And three, where are the tailwinds? I mean, where are some good actionable areas that what we're seeing in the world we can jump in and capitalize on? And I'm happy to disclose them, but we've carved out three distinct areas that we know that they check all of those boxes, and we want to get the deal done. So when we do find that opportunity, whether it's on a proprietary or auction-based process, we have very strong conviction. And honestly, we can approach pretty damn aggressively to get the deal done and have high conviction that we can underwrite, execute on a strategy, and return dollars to our investors, which is our one job function at the end of the day. But one of those areas was clinical trials, and with the help of a great software provider, starts with an A. I think we all know the name of that.
Does it rhyme with Latvia or look like Latvia? Yeah.
That is correct. You're on the right track.
All right.
We basically it's nothing overly sophisticated, but it comes down to our data integrity, the flexibility of the platform. But we had a very distinct thesis in the site management clinical trial space. We knew based on our CRM, our database, our third-party data resources that were plugged into our CRM, all the relevant bankers, all the relevant comps and deals done over the last 24 months, and built this true scorecard benchmark of what a good business looks like. We exited a business 2 years ago to have that track record. We pulled all of our operating advisors from our CRM that we knew had great experience there, and basically went to our intermediary relationship, said what we wanted to find, why we wanted to find it, and we ended up getting a deal done 4 weeks ago on Friday, of a great clinical trials business based in Florida that we're very happy to partner with. So that's one success story of those three thematic searches that we'll continue to execute in the market that we're in right now.
Yeah, love it. We'll unpack all that. It's amazing. I have so many things I want to go back for. Before we do, Tim, I want to ask you, are you guys out there looking for what appears to be zombie-like behavior as an LP? I mean, is that the story that, people come into your conference room and pitch, and you're like, wow, that sounds great. Just pile in with everybody else and kind of gnaw on it. Yeah.
Yeah. I think that's a really attractive proposition. No. No, we're certainly not. I think for us, the kind of investment ethos of our business is finding differentiated returns in the lower market. What does differentiated returns mean? I mean, we are completely flexible capital, so we are looking at just about anything in the market at any given point in time. There are going to be a lot of similarities across strategies. There are going to be a lot of people that say the same things. So what truly makes somebody differentiated? What gives them a competitive advantage? And it's some of the things that Charlie mentioned. So having a proactive thesis-driven approach where you are actively looking for things that are going to be a net winner in the long term is the starting point. Developing a robust sourcing process where you have developed and kind of cultivated over years in many cases, strong proprietary sources of deal flow, whether that's a small intermediary in Kansas City or, an executive in New York City. You have kind of the first look at a deal. That's going to be a competitive advantage. Another thing that we like to look for is some sort of operating network, and there are many different ways that this is deployed. So Charlie just mentioned kind of how they go about it in some capacity. Whether it's people on staff or people that you have on speed dial that you're going to bring into the business to help you underwrite a business or potentially run the business, those individuals and their experience are invaluable. Making sure that these are quality folks, and particularly in the lower market, the businesses that we're looking at are in the funds that we're looking at are investing in the same space that Charlie is in. 10 to 25 million, 5 to 25 million sometimes is the range of EBITDA businesses. There are a lot of things that can go wrong in a small business like that. You need to have somebody that understands, what are the different things that we need to work towards, and what are the things that can go wrong, and how to quickly adjust to things when things go wrong. So having a strong assessment of the individuals that are going to be operating the businesses, even if it's the investment team. There are some firms that don't really have an operating partner network that really go in and invest time in these businesses themselves. You'd want to assess their capabilities as well. Across the board, I think we are just looking at things with a little bit more of a hard line. Do they have it or do they not? Type of approach, because we really can't afford. We have a lean team. I can't speak for Charlie's team, but I know there are others on the allocator side that are relatively lean. We can't afford to spend a lot of time and resources looking at something if it's just not going to check all of our boxes, as maybe obvious as that may be.
Yeah. Well, you both used the term and explicitly or implicitly said something about the matter, but differentiated. I'll tell you right now, I'm on the record. I've done these webinars where I've said it on the podcast a couple times. It's really pretty interesting as a software provider, right? I mean, we're sort of talking to customers, we're talking to prospects, all sorts of different people in the market. And I kind of rather enjoy when I get a chance to talk to folks and like, well, what, curious kind of what do you feel differentiates you? One of the things about Opia that is part of our ethos is believing that the way people use technology and data, and the data that comes from the technology, actually does stand to present actual differentiation. And so I get this kick where it's sort of like, what do you feel differentiates you? And I'll be honest, I mean, it's sort of the same answer a lot of times, which by its own definition, can't be differentiated if everybody says the same thing. Now, I get why we say it, and I get that it also there's actually something there, but it sounds to me like what I both heard you say in slightly different ways is that now's the time to really do that. Charlie, from your perspective, looking at how to really do that and not just say it. But Tim, sounds like you guys are sort of probably at an all-time high in terms of really trying to understand that quickly. And if there's not a lot there, I mean, maybe there's something there, but if the story doesn't sort of come together pretty quickly, it's the sort of market for you guys where it's just like, you got to move on to something else. So I want to go back and just talk a little bit more about that. And, when we were talking the other day, I mentioned, go back to my days, when you're fundraising and this kind of new idea for this theme of something that might differentiate us comes up, it's like, oh, we need a new slide to kind of tell that story. And so I was kind of toying with the idea of like, what are the new slides, you guys are sort of working on? What are the new slides you're seeing and stuff? You kind of mentioned some of it here, in terms of kind of being sector and, thematic focused and stuff like that. Let's go back in a little bit more detail on that. And Charlie, I want to, kind of understand the process of technology's role here, because I think you had said something about how that actually is helping to maybe find the differentiation, and then to kind of help confirm that it's truly a thing as you sort of put it through the machine of being thematic and looking at stuff like, is this actually the stuff that's sort of fitting? Tell us a little bit more about that. I do think that what you guys are doing in your work with us is fascinating.
Okay. Yeah, happy to. And I'll get into the technology piece. The one thing I'll offer up is that we promote heavily, especially to our investor base. Look, resource allocation is always top of mind, and Tim spoke to that, and that is so true. Our time, our resources, our dollars, but we truly have the ability to be creative. And so when you think about the mid market, lower middle market, I mean, we really come in. We're willing to come in at 2 of EBITDA and then build a platform that is, institutional backable that can underwrite and show well with LPs. And so we have a thesis. We can be creative, and I mean by that is start typically pretty small, where other institutional investors are not able to do so or willing to do so. Now, certainly a risk in a pretty fragile, volatile business. We've got a great track record of finding those small diamond in a rough, building around that management team, and have great outcomes and exit. So that is one way that we definitely differentiate ourselves. On the sourcing side, data management, I mean, that the technology stack that we leverage, I'll kind of level set that it is very competitive. There are new sponsors, fund managers every day. I mean, Tim looks at this on a daily basis. Fundless sponsor, independent sponsor. I mean, people are raising like crazy, especially the prior years that we're coming off of. And so we're there's a lot of us in the market. So how do we differentiate ourselves to sellers, to founders, to bankers in our deal source relationships? And then finally, and arguably most importantly, is our investor base. And the investor base, it really is on that technology piece. So we lean heavily on the Alt-Via team to first start with our third-party data providers that, if Alt-Via would offer, I'm sure it'd be better than any of them, but it's just not the same business line. So we're looking at market mapping, make sure we understand the competitive landscape, how fragmented it is, and not just hear from a banker, it's highly fragmented, but we want the quantitative information of how big this market is, who the key OEMs and players are in that, and then how many of those small mom and pops that we could acquire to really make up that landscape. And then any relevance on that data set, we are flowing into Alt-Via and managing from there. And so what I love about Alt-Via and the Salesforce ecosystem is just how flexible it is. So we can come to the Alt-Via team and say, look, we've got this kind of out of the box idea. Is there a custom object or workflow or automation that you guys can build for us? And more times than not, it's a yes, let us kind of whiteboard this and come back to you. And, I'm surprised that our system is not broke at this point because we have so many custom objects and automation that is driving this thematic approach, the creative kind of smaller deal market approach. And then third, our intermediary relationship. Another way that we differentiate ourselves is we tell LPs like Tim that we're fishing from a different pond. And we mean that. Our long tail of deal sources where the typical investment banks are showing us average, 5 to 10 deals a year. Majority of the deals that we get done and opportunities we get done are from the onesie twosies intermediaries in Kansas City or, fill in the blank. I mean, we've gotten deals referred to us from realtors who had a friend and, offered a referral fee. So it's a difficult market to cover when you think about my time and my team's time and resources. And we require software that keeps us in line, that does all of our time management, reminds us who's delinquent, who's a priority, and the type of outreach required to stay relevant and top of mind for
them. Yeah, it's funny. From time to time, I'll end up, passing kind of demoing some of the stuff that we've got, and there's this particular thing that I like to show, and it's sort of like. The rough idea is here's where deals are coming from. Here's what the exhaust of them moving through the pipeline looks like, right? So here's where most of them got kicked out. Here's how long they stayed there. And then here's what got through and where it came from and how long it took and all those sorts of things. And again, the idea with what we're trying to do is provide as many sort of data ponies as we can. If there's something in there interesting, to you, then we want to make it easy to find it. And so on this particular view, one of the things that I tell people is, hey, just the way that the demo data is kind of set up in this case, to show like person, like when somebody gets asked the question, oh, who's your top deal source? What does that even mean? I think a lot of people are like, oh, the one that sends us 1,000 deals a day, right? It might be one's definition. That would be fair. But in this particular demo screen, it's like, yeah, none of those are close. You're spending a bunch of the time on deals that you can't get closed. Did you know that the sort of ones you close on actually coming from the, and you know, I joke with people in the demo, I'm like, it happens to be a name that seems like kind of difficult to pronounce. And so if you're sitting in front of an LP and they ask you this question, would you pronounce the name right? Or would you even know that that's actually the sort of answer? Sounds like kind of what you guys are finding in this market, Charlie, like that long tail, yeah?
Yeah. We lean on that long tail. And again, I think highly of myself sometimes, but it's we can't do it without our technology. It is my time management tool and my team's time management tool to make sure that we're covering the right folks. And the right folks is really defined by the technology and how we create that criteria, whether it's IOIs, LOIs, closed deals, management presentations, kind of fill in the blank metric that we track.
Yeah. Tim, sitting in front of a GP that says, oh, well, our process is differentiated. The way we find deals is differentiated. What's your first thought and what do you do? I mean, you know, what sorts of questions are you asking? And ultimately, I know as well that you guys are using our technology to do some cool stuff. Talk to us a little bit about, you know, when we talk about LP transparency and all this data that they want and stuff. Are we really digging into that to see if it's truly differentiated? And maybe you're the one finding the pony that the GP didn't mention, and that doesn't seem like it's going to go well for the GP. Talk to us about that.
Yeah, I think to your last point there, Jeff, if I'm not finding stuff like that, I'm not doing my job. Our investors are relying on us to underwrite these sponsors, and that means kind of turning over a lot of rocks to try to find something that doesn't look right. Even if we can't find anything, odds are it's not a perfect opportunity. I think perfect opportunities are rare. Whether it's a fund or a deal. On the point of differentiation, if a sponsor says XYZ is differentiated and this is what makes it special, candidly, my first reaction is like, prove it. Show me what you're talking about. And if they can show me, a pipeline that is like incredibly robust and is well within their strike zone on every metric, and you can have, as a potential LP stepping into a portfolio, have confidence that the sponsor is sourcing things that they say they're going to source, and they're going to execute the strategy the way that they say they're going to execute it. You can have some confidence in that claim. But nonetheless, there's still work that you have to do on the underwriting side in terms of determining how differentiated is that relative to another group that's saying the exact same thing. So there's a relative comparison type of analysis that you have to do, and we've used Albia for that. On every decision that we make, there's a qualification of the group that we're working with, and whether we think that they're a stronger candidate as an organization than another sponsor. And then the same type of analysis takes place at the fund level. If we're looking at a fund or two different funds, how do they compare against each other? Do we feel as though one is a better fit for our overall portfolio, first and foremost, but then second to that, which one do we think is going to be more of a differentiated. I keep using differentiated. I can't think of another word, that defines that what I'm trying to articulate. But that is going to be kind of the best option for us given the parameters that we have at any given point in time. And yeah, I mean, we've thought of as many different sources as we can to pull into our system, and we just recently started using Answers, which is an Albia solution that we know will unlock a whole lot of analytical capability for us that we previously didn't have. So there are always ways that we are iterating on our underwriting process to allow us to hopefully be able to uncover more things quicker or earlier on in the process. But we're as Charlie mentioned, I mean, we are using Alvia heavily to kind of streamline our process and understand exactly where we need to prioritize time based on where we have demand from our investors, where we have a need from a portfolio basis, or just what's in the market, what's timely, and what needs to have a decision made now.
Yeah. When I think about what you're saying here, but also what I've seen you guys up to and some of the strategic stuff we've helped you out with, I have this little satirical sort of thing in my head of like an LP being like, okay, so you gave us all this data and you told us you're differentiated, and it turns out that you are differentiated in a totally different way than you thought. Here's what we found, and having the GP like, oh, amazing, thank you so much. We're gonna start going with that instead. And there's a situation there where you could get comfortable with that. I think it's like, well, it's still there. We still found why we want to, partner and back you. Just, could have been easier for you to have led with that, and all that. And going back to my days as a institutional LP, that was the name of the game then too. Now, of course, the sort of sharing of data and the technology solutions available to marry it up and to generate and all that stuff are far more sophisticated. But I want to ask this question, Tim. Do you judge GPs on how long it takes them to provide you with the data that you're asking for? It's okay. I did. I didn't feel comfortable saying that, but I asked that question of a lot of people, and it seems anecdotally like more and more people are like, for sure we do, and confirming that. Let's get your answer here on the record webinar.
On the record, short answer, yes, I do. I also judge GPs on how they respond to questions about their portfolio. If there is any type of hesitation or uncertainty or lack of conviction in their response, that's also something that I judge them for.
Yeah, good. You're not alone, obviously. And for the folks from GPs joining us, including Charlie, there it is. You're being judged. I'm curious, Charlie, we talked about this a little bit. You guys are in that camp in my head, and I haven't gone through all of your data as an LP, so I'm trusting, based on having worked with you for a while, that I've seen enough to know it's there. But talk to us a little bit about that. I mean, you're saying you've been using some technology and data to find some differentiated stuff, get in there. I love the word conviction, right? That means, hey, we'll be more aggressive because we know we're not just sort of, at the door with all the other zombies hoping to, kind of get the best deal. How does that transfer to telling the story to LPs? You said it was probably the most important part. How much do you guys bring that into the process and say, well, here's how quick we can respond to that, or let's sit down in real time. You can ask me anything, and we'll talk about it. I mean, help us understand how much value and how differentiated it is for you to sort of tell this whole story. Because it's one thing to get into the deals nobody's in, but then you could totally botch that. And to my sort of satirical situation there, it's like you may not have said that, and yet the LP determined it for you. That's not the case. How are you guys kind of highlighting that and telling the story with LPs?
Yeah, I mean, look, with the help of Alvia, we have a lot of data. It's an iterative process. It's honestly more art than science at this point. I mean, when you look at, I'm not going to give Tim access to this, but you look at our kind of archived slides on our current LP presentation. I mean, you can chop this data thousands of ways. I mean,
sure.
we have so much information, whether it's on the sourcing front, the portfolio performance front, or just where we're hunting this thematic search in our system, that we are constantly pulling new drafts of information. So it really is. It's a process that we're doing today, tomorrow, yesterday, and constantly thinking of creative ways of. We have this powerful information. We need to do a better job at figuring out what the answers, what are the solutions that Tim and team is looking for that make us stand out in an overly competitive market. I think real time. Look, we as simple as the concept is today, we're big believers in just visualization tools, whether it's within the VIA system. I mean, we're currently, tapped into a third party visualization tool as well that flows directly from VIA. And so we have an endless supply of dashboards that aren't just made to be made. We're really utilizing, and we have a separate report that VIA has created that shows reports or dashboard usage kind of by user. So, we're watching this real time, so we know who is leveraging all of the visualizations and information that we've created. So one, I think we're flexible. The lean team as a reference, but we have the ability to kind of spin off information as quickly as necessary from our co-investors, from our LPs, from our operating advisor network. They're running diligence too. It's not at a fund level, but it's more sector dependent, and we have to quickly drum up information for them and in a digestible format, and that is the visualization tools that we have implemented right now that we leverage all the time. So not a great answer, Jeff. I think we're constantly learning iterative process and have a lot of information to pull from right now.
Well, I think it's a great answer, man. I knew the answer when I asked you the question. But I'm curious, like, specifically, because, where I'm sort of at right now with my line of questioning is like, on this judging the time it takes and, this sort of LP dynamic. One of the things I know is very common right now is bringing somebody in and, helping kind of walk through the portfolio and understanding potential co-invest, stuff like that. And so that's a sort of stage as well, right? It's not just these sort of data requests that are asynchronous where the analysis is done by the LP separately. You guys are, kind of armed up there. You're able to sort of bring somebody in that can talk to the co-invest, understand the portfolio, and in the broader fundraising story, that's important, right?
Yeah, vital. A lot of times.
Yeah, Tim, what's that like for you guys? I mean, what's your perception of that? I mean, is that an opportunity for the GPs you look at to maybe have the differentiation moment when you've been through 100 of these portfolio walkthroughs, and then on the 101st, it goes away that you're like, that person really understands the portfolio. They really got it. And there are some interesting opportunities maybe for us to co-invest, and we can get conviction with their process. I mean, talk to us about that.
Yeah, to echo kind of a component of Charlie's answer there, I think visualizations are amazing. The best way to understand kind of what a pipeline looks like is actually seeing it, whether it's in a curated dashboard or like the raw format that the GP is using. That has been immensely helpful in terms of like understanding exactly what their own process is internally, or even what the output of it is and what could ultimately end up in the portfolio. In either case, a visualization and seeing the data being used or on the platform in a kind of a tutorial in some sense has been great for me. I've always viewed those favorably. I've always thought of GPs as having that capability as a group that's kind of a cut above the rest. There are surprisingly not that many that have that ability to kind of give you a live look at what their pipeline is or their internal data on where they're sourcing deals from or what they're seeing in the market. That stuff is immensely valuable, particularly if you walk through it in person as well. A lot of times you can do things over Zoom these days. A part of our diligence process is meeting groups in person. Maybe it's a little antiquated these days, but we want to go into office, sit down with the investment team, meet as many people of the firm as possible, also go through all of our ODD diligence and, legal and background checks and all those things. That's kind of a comprehensive due diligence. I mean, we are looking for groups that are willing to go through that process. Any group that is unwilling to go through that process is not going to get a check. I mean, that's kind of a table stakes type of arrangement.
Yeah. Their own group of zombies, lining up to meet at the LPs. I did not anticipate using the term zombie so much here. It's working though, especially the day after Halloween. Yeah, it's funny you said that, Tim. I mean, so closure. I appreciate all of the love you guys are sharing for Althea. I'm not going to tell you not to. Also, not the point here. I'll just mention one thing. I mean, that's a big opportunity, for us. We've seen this opportunity to help the GP tell the story, not just to help generate the exhaust of the data that comes from, kind of sourcing activities and being, workflow driven and reminding Charlie to call this source that, the data says is great, but whose name is hard to pronounce because nobody's talking about it. But there are all sorts of ponies in that data that the GP then can say, okay, great, this actually confirms or maybe sheds a light in an area we haven't been looking, and then the opportunity for us to help with our technology tell that story to GPs. And it's always cool. I agree. Not enough. Tell it on behalf of the GPs to the LPs. Agree. Not enough people are taking advantage of that. We're here to fix that. So holler at us and reach out if there's a problem for us to help solve there. But I think every time that comes up, I think about this story I heard recently from a massive, I think top 5, top 10 in terms of AUM private equity firm. Not a customer of ours, but I heard the story of a role they hired into for somebody to basically, in talking with that person, have 7 spreadsheets up at the same time, and also looking at the camera on Zoom and just trying to sort of, and man, that makes me, I really, it makes my sort of blood pressure go up a little bit thinking about being that person. And so, with good data, good technology, it doesn't have to be that way. I want to take a minute. It's 11:45 here in Colorado. 15 minutes remain. Please do ask us some questions. I've got one I know out there in slightly different direction. Let's go back and kind of dig a few things up here that will be interesting to the audience. But Charlie, you mentioned it, right? So your data is a factor of the data you generate, that exhaust I'm referring to. So to third parties, right? There's a lot of third parties out there. Something earlier that was mentioned made me think of one of our new partners, Dakota, which great IR fundraising data set. It came up because one of the things they have is manager, presentations and LP analysis from FOIA funds. And interestingly, we were looking through some of those, and many of the LPs write up the case for GPs and talk about their technology. It was very interesting to see that. But in any case, on the sourcing and universe kind of mapping side, I know the question's out there. What are the sources and what makes a difference? So Charlie, we did a webinar a couple of years back. We talked about some of the novel ways that you go find data. What would be your answer to that?
Yeah.
What are the sources out there? What makes them good, bad? Which ones are interesting to you? Third parties.
It really comes down to data integrity and just quality of the information. There's a ton of platforms out there that offer private company info, estimated funding, private equity experience, any transactions, all public information that are then plugged into specific platforms and this cool UI and, user friendly. I think we've got a couple that we use that essentially helps us find proprietary opportunities. Now we're not going to go to Tim and say, look, we only do proprietary deals, but given our size range, there's not a lot of bankers that are willing to take on, a 2 of EBITDA calibration business or industrial services business. And so we have the ability to kind of flex up and be creative without making this massive manual resource drain just due to our technology resources. Whether that's simple API integration with Althea, upload, import, and then we can do some direct calling. We can do some direct emails. It's never a fishing exercise. I mean, look, we'll tap a universe of, call it 5,000 private companies. We'll pull out 12 that based on what we know and the information that we've aggregated, we would invest in that business. Now, obviously, diligence has to take place, but we take a very curated, personalized approach to find these businesses that fit within this thematic approach. Now, the number of deals that we're doing a year that fit within that description is low. I'm fine to admit that. But in a market that we're in today, this has been a great feeding ground and opportunity for us to, at a minimum, meet founders, get to know their business a bit more. And even if they don't want to sell to us tomorrow, when they do hire a broker, a banker, or intermediary, we're going to be at the top of the list. And we have that early access to management and know the team well. So, look, I'm happy to give the names, but there's a number of private company information aggregation tools that we really lean on that help our sourcing and also diligence measures on a new platform investment.
Yeah, and I think we know the names. We're integrated with all of them. Capital IQ, PitchBook, Source Scrub, big ones you'll hear a lot. Many that too many to list here. But
Correct.
I love this idea of like, if that's all that everybody had, then nobody is differentiated.
Correct.
Correct. If it comes about what do you do with that, and what other data points come out of the activity that you got the idea to take based on the publicly available stuff.
Yeah, I think one. Now, this is not proprietary technology by any means, but we found groups that actually use, not to use the buzzword in today's world, but actually use true artificial intelligence that has a true algorithm that we manage. It's not a database that they pull from names that they've aggregated over the years and since inception and since the last fundraise. This is a real-time AI tool that is scrubbing the internet as we know it. I mean, it is looking at business description, any keywords. And honestly, it's allowed us to stay ahead of the tools that a lot of sponsors use. So that's been one key area. But I think, yes, to your point, it's if everyone's on it, there's nothing really unique about it. It's one, finding additional tools, and two, figuring out how to leverage that data quickly, effectively, and make the most return on that investment, because it really is an investment for our time, but also cash and capital needs.
Yeah, no, I agree. I appreciate the acknowledgement of the buzzword. I think there's a lot of power. We're having an AI moment. And when we have moments like this, it means there's something really there, and it means there's also a lot of noise. And the thing I've mentioned this a couple times, I keep waiting on is the data sources, the sort of ones that we don't know of yet, but which are able to understand, like in your case with your strategy, Charlie, it's like, here's an entrepreneur who built and bootstrapped a business and whose daughter is the, star varsity lacrosse player and likely to be accepting a scholarship or playing somewhere where mom or dad, the entrepreneur, may need to take some off the table, and getting ahead of that process being banked or formally coming to market and building relationships and stuff. So that's just like this one thing I've always thought of, like, man, when do we get that data? And that's not a huge data set, but the point is, when is the technology, data capabilities, and AI, when do they start presenting and selling that? Because you'll pay a lot of money for that, I'm guessing.
And there's even tools that we've used in the past that we can find business owners that have searched for investment banks or M&A process past a number of times where it's a true search criteria. We can even harvest that information and go directly when they're researching that, which is a little scary, but it's out there.
Well, look, the thing that's scary is when nobody has any interest in actually bumping into each other. It turns out that it's inherent in that there's probably mutual interest, and so it's no longer scary. It's convenient in that case. Yeah.
Correct.
Cool. Well, we're coming up against it. I want to offer the audience another opportunity. Please feel free to jump in, ask us any questions, but just maybe kind of ask sort of final word, and that could just about be anything. What's the stuff that isn't happening yet. We just kind of talked about that you guys are thinking about. I know, Tim, you had mentioned when we talked the other day that you guys are thinking about, building analysis tools in a way where you can very quickly and dynamically change the inputs, and so you can adapt and not have to kind of rebuild the data that you consume, but maybe take flip it around a little bit based on something that just changed. I mean, what's the sort of stuff that is coming? What's top of mind? What if we did this webinar in 2 years? Would there be something dramatically different, and what might it be? It might, I'll say AI probably a much bigger part of the conversation at that point. But how about for you guys as we wrap up here?
Yeah, I mean, for us, in 2 years, our process could look dramatically different than it does now. I think if you're not kind of iterating on what you're doing, you're not learning and growing and becoming better. You were always looking for alternative sources of information that could give us a better decision, help us kind of move quicker through a decision-making process. With Alvia and kind of the bevy of resources that we have, we are trying to pull in alternate sources of information to help our underwriting process just become a more robust process. Whether that's pulling in deal information similar to what Charlie's looking at on the sourcing side, just to have a better approximation for what the market looks like, which is not something that we currently do. Even something like that, which we know is a capability that we could implement, is some of the things that we're thinking about. Overall, like I think that the kind of process in which everybody has access to the same thing, or kind of, I guess, the status quo, is very real. Even for us on the allocator side, I mean, we are always constantly looking for additional capital partners and investors to bring into our network, and there is a differentiation aspect that even we need to bring to bear in those conversations. And the breadth of our research and our capabilities and our data help support those conversations all the same as Charlie does when they're interacting with groups like us. So, overall, we're just kind of continuing to try to enhance the system that we have and refine the story, such that, we don't have a situation like you described earlier, Jeff, where someone says you should have led with a different point. And, hopefully in 2 years, we will all have been immensely successful in our efforts.
Yeah. We actually got the question, as I was sort of asking it, formally asked as what are the most innovative ideas in how to track sourcing that are not in the system yet, but ought to be there in 2 years. And that's that sort of exhaust, I think, when I think about it, is like, it's kind of out there, like it's being created. And then the question is about, like, when we know we want that, how were we able to sort of track it? It's a fascinating concept. How about for you, Charlie? Any kind of last word thoughts on that?
Yeah, and we're always thinking about just how to be more proactive versus reactive. I mean, a lot of the information is very in the rear view. I mean, based on, it's been, for example, 90 days since you touched X banker, it's time to touch them again, or, have a phone conversation to fly to New York, whatever it may be. And look, we don't know what's on the horizon, but I think there are some smart, tools that are going to be far more predictive than just a simple cadence or frequency that's going to allow us to get ahead of processes, stay top of mind for bankers and founders, and be far more proactive than reactive, which, I think most of us are today with the information that we have. There's some tools that are getting closer to being more proactive and more of this preventative type thought. But it'll be interesting to see. I think there's one thing that we can't take away from our business is that it's still very relationship based, and it always will be. A seller selling their business is their pride and joy, and so there's no getting around that. And us having relationships with intermediaries and deal sources and LPs is still going to come down to, like, Tim and I's relationship on a personal level.
Yeah, absolutely. Yeah, and I think, on this question, I love this question. We had a customer advisory board in-person meetings a few weeks ago, and we talked about this topic of a lot of, I think, process around data management stuff is a matter of organizing and being committed to storing information that you may not yet know is valuable, right? Because this is what's fascinating about AI is like, well, so tell me what's in my data, and AI is like, well, you don't really have anything in your data. But when you've committed to, capturing that exhaust and organizing it well, and then looking for patterns in it, perhaps AI is able to do that. So I think that my answer to that question is, the innovative ideas will come. I think there's a base level of sort of commitment that I know you guys, as sort of the culture of your firms, are committed to, but making sure you're committed to actually, being data driven and having process that allows you to even be in a spot to capture exhaust that you don't know there's ponies in yet, so you can come back when the technologies and innovation get there to be able to kind of make sense of that. So we could go on for hours and hours. This is awesome stuff. I really appreciate you guys joining us. Thanks for being doing your thing. Thanks for working with us. We're grateful to be a part of it. And thank you for everybody who joined us to talk through this today. Let us know if there's anything that we can help you out with. Always interested in swapping ideas with any and all. So please reach out if you're interested in it. Guys, thanks again. Most appreciate you. We'll talk to you soon, and keep doing your thing. I can't wait to catch up again on this topic here pretty soon. Good luck to you guys.
Thanks, Jeff.
All right, take care, everybody. Thank you so much.